Philip, I'm going to start off with you. What do you make of these big buys into United that are pushing, the Dow up? I think the real question here is this a sign that at least big investors believe that the healthcare trade is bottomed and there's upside from here?
Yeah, I'm not surprised that Warren Buffett would move in that direction. If you look at the laggards so far in 2025, I think healthcare and United Health in particular were, some of the weakest areas. And, I think after the strong moves we've seen, and particularly off the lows in April, where the big tech names have really driven a lot of that outperformance. I think moving into some of the areas that have been beaten down, like healthcare, seems like a good strategy from our standpoint.
Robert, similar question for you. Seeing Berkshire Hathaway and Appaloosa, even Michael Burry, again known for really shorting stocks, and he was previously shorting this stock, now buying into the stock. Does that give you more confidence in either in this company or the healthcare trade overall?
It does. It highlights that the sector has been underloved and undervalued for a while. You get some investors that are willing to step in. That creates a sense of momentum. And it's an area that has a lot of potential for margin recovery. It's an area that has not fully recovered pre-pandemic margins. Been a lot of disruption in the space. Now that you get some clarity, get a little momentum behind it, people can focus on the fundamental story there in healthcare, which is the potential to increase efficiency and boost earnings. So we think it's an interesting development.
Philip, I want to come back over to you. What does this say about sentiment? Because we were talking a lot about the froth in the market. In fact, we played a soundbite from Jim Cramer, who was talking about, some of the riskier stocks need to go up for the broader market to go up along with some of the better stocks. But what does that say about this market that we're seeing big investors move into what's generally a defensive trade and a beaten down sector, while we're still seeing, the markets push to new highs and really tech still dominate?
Yeah, I think it's a sign of a broadening, hopefully. I think it's early days though, as far as kind of seeing that broadening. We have seen small caps starting to do pretty well this week, not yesterday, but we have seen some broadening in markets, and so I think it'll be a welcome sign that more of the returns is coming from some of those areas that are seeing better valuations, for example, because as I mentioned, technology stocks and basically the AI trade, drove about a third of the recovery off the bottom, and we haven't really seen the other stocks doing a lot of the heavy lifting.
Robert, I want to come back over to you just about the broader market. We're looking at gold. Gold is having a down week. The dollar's having a down week. When we're seeing that safe haven asset of gold moving lower, Bitcoin moving higher, what does that tell you about sentiment going forward, even after that PPI report that just came in hotter than expected?
Yeah, a lot of interesting cross currents going on there. Some of the traditional sentiment metrics aren't particularly overheated, but when you look at things like where valuation is right now, and we peg it to be in about the top 8% of all valuations, trailing 12-month on the S&P over the last 30 years. So pretty elevated valuation. At the same time, you've got the VIX relatively muted, trading around 15. So it says that people are pretty comfortable with this market here. The question is, are they too comfortable? Are they doing too much to price in a lot of work from the Fed in terms of reducing rates to support those valuation metrics? So on a short-term basis, things seem a little bit stretched on a valuation perspective. Again, particularly with vol where it is right now, just shows a lot of complacency in terms of valuation versus volatility at the moment.
One of the things that seems to be pushing the markets higher, Robert, I'm going to stay with you just for a second, is that here we're going to get a Fed rate cut. I'm looking at the CME FedWatch tool. We're still at about 92% odds of a Fed rate cut coming up in September. With that in mind, we already talked about healthcare. Is there another sector that you're bullish on right now going forward?
Yeah, we like both technology and industrials for different reasons. Technology is a sector that has the ability to sort of create its own destiny via profit margin expansion. That's unfolded over the past few years. We think it continues. And industrials really benefit from the policies that have been put in place in terms of CapEx and a focus on domestic activity. We see a lot of that spending being directed in a way that will eventually improve the earnings in the industrial segment.